So, from a loan officer's perspective, would you say 2025 is a year of opportunity or a year of survival?
I think we're still in survival. I think this will be the longest hard mortgage cycle I've been through. 2000,
Mm,
the great financial crisis. So that started, let's say, really late '06, but our industry didn't feel it until maybe late '08, and then into '09. But there were lots of Fed stimulus, lots of refinance programs. So just as you thought you were about to go broke and die, something came your way and you could refinance a bunch of people, and mortgage companies kind of came back to life. Um, the last time Trump was in office, rates started spiking all of 17, 18. The business got hard again. All 18 was hard. A lot of companies were struggling, but then the refi wave of 19 came, saved everybody. So this is one of those weird times where it's a fuzzy buying market, from number of units, right? Just because people are still locked in their house from, low rate refis, not a lot of transactions, and higher interest rates that will likely remain a little stubborn. So I think this year is still survival year. I think 26 and 27 are going to be really, really good, because I think that's,
yeah.
when you take even people with low rates from 2020 and 21, you get 6, 7, 8 years beyond that, they're making more money, their family size is getting bigger. You just have these like catalysts for change and move. And then I think everything becomes unlocked in 26 and 27. So, but yes, this year I think is going to be a
Yeah.
survival year.
Yeah. I think that makes a lot of sense, unfortunately. What is the most creative financing strategy that you've seen to date?
That's again a hard question, because when people say creative, the reality is I think they're just using rules, right? That exist, and some loan officers know the rules and some don't. So when people are like, "Oh, they're really creative," I think you could change that by saying like, "Oh, they actually know all the rules." So
Yeah.
I
Yeah.
can't really pick one. There's strategies of using bridge loans. There are strategies of getting under contract. So you know you're in title business and you read contracts all day, and unfortunately our industry has become, at least locally, where contracts are written to show capability and not true desire and not true outcome. So sometimes it's, how do you structure offers to get under contract, even though that might be different than what you ultimately do from a financing perspective. So that maybe we could call creative. um, Using bridge loans, enhancing credit to get better interest rates. Maybe another one that's a little unknown is, a lot of people, there are these lower interest rates for first time home buyers that make less than 182,000 a year in our local market. And if you have, let's say you have one person that makes 150 and one person that makes 150 in a household. Well, if they qualify on just one of those incomes, you can simply exclude the other one and give that client the better interest rate. Some people don't do that or don't know it. They're like, "Oh, you make 300 grand, you can't get the better rate." So that might be another creative solution.
So, what is an unpopular opinion that you have about the current economic landscape?
Yeah. So I joke about this one because I keep saying that this one's going to get me canceled, but at least in our local market. But I think there's a chance that all the crazy that's being done right now with Doge, with government spending, with tariff negotiations, that all that stuff actually works to then have us see the DC metro area not only continue to thrive where we're already thriving, but to take the areas that are struggling and have that just explode higher in sort of a rebirth. And I think there's a combination of, the chance of lower interest rates. There is a chance of, if tariff stuff works, right? Part of that is revenue, which might lead to lower taxes. So even if the cost of goods go up a little bit, your take home pay is higher. It's going to be better, back to that K-shaped economy, better for the first time home buyer, the person trying to crawl into the market. But I think that's probably the biggest, most unpopular opinion and I don't know how much I believe that opinion, just for the record, but I can see how it could all work. My only real fear is the timeline between events, right? If you say, "Hey, I want to do all this stuff as a government, I'm going to, get rid of all these government jobs. We're going to pull back all this government spending, which impacts our area absolutely the most in the country. But don't worry, we're going to bring manufacturing back to our area. Well, we don't really have a lot of local land for manufacturing other than Virginia, maybe parts of Maryland. But even if you wanted to, that takes a lot of time. So I'm more curious about the near term, 6 to 18 months, what really happens, what struggles maybe exist before we get to the other side. But I do believe a little bit in the opportunity that could come from some of these policies. And again, that's by just saying that out loud is why some people will cancel me.
I get it. I get it though. I get what you're saying, and I mean we got to stay hopeful, you know.
Well,
I mean, how can we not?
it's
So
if you think about, and again, it's so hard for anyone in our area because when you're personally impacted, it hurts way more, right? You could have a belief,
totally.
but then when you're actually impacted, so like me, I'm 90% of my business has been DC. And of all the loan officers in my company, I'm probably the one underperforming the most because my market's DC, and that is the market that's probably hurt the most out of everything that's going on. So it's easy to try to like throw daggers at like, this is bad. We shouldn't be doing this. But if you go all the way back
Totally.
to the financial crisis, I think our government has created, every administration has created big bubbles. They've just put patches on so many things with more money, more stimulus, pumping it up bigger, bigger, bigger. The rich have gotten insanely rich and the regular people have not, right? And I think this actually might be one of those points in time that it balances out a little bit. And I hope to see that. I want to see more people have access to housing because I truly believe owning a home, if I go back in my life, which I'm actually going to try to do like a little documentary because I've taught myself a lot of stuff through very bad life lessons, hard lessons. But I come from, my mom, we grew up in subsidized housing. She had me when she was 16 and I have an older brother. So like we didn't grow up with a lot of financial soundness and investing and stuff. Like we kind of like taught ourselves all this stuff. But it was once she was able to get into a house that our life changed. Stability, equity, you can start building and planning and preparing, and life took off and became better. And if more people can experience that, I think we're all going to be better off. And I think the way the system has been working for the last 15 years is it was not for those people. It's rich get richer. So I'm optimistic about some of these things and where that might take us from here.
I love that. Well, thank you for sharing that with me. I've got one last question for you today. Do you think homeownership, well, now it's interesting asking you this after what you just said. Do you think homeownership is becoming an unattainable aspiration, particularly for younger generations?
Yeah. Now, so, I keep talking about K-shaped economy, right? So yes and no, because if you might be struggling, right? You home buyer, younger person, you have a job, but your parents might have a lot of assets and your grandparents might have a lot of assets. So if you happen to be in that generational line of money and wealth, it's actually not that hard for you because the gifts that I'm seeing are huge, where parents are giving 200, 300, 500. You probably see it on your wires, right? On your Alta statements.
Oh, yeah.
They're huge.
Oh, yeah.
So a lot of people have benefited from housing and wealth creation, the stock market, and all those things. So yes, I do think for a lot of people, getting the first house is so hard. And the only thing
Yeah.
that honestly makes that better is lower interest rates, maybe some policy that changes how loans are priced. They have all these loan adjustments that make it hard for certain people. And then, prices. So, I do think prices will have rebalanced so much in DC that if we just get a little benefit of rate, I think you see the condo market just light a match and it's going to be on fire, right? Because prices have already rebalanced. So I think interest rates will be sort of the big focus. And even the Treasury Secretary said, they actually said, we don't care about the Fed. We're focusing on the 10-year bond. So the 10-year bond goes down, mortgage rates go down. Coincidentally, to get the 10-year bond down, usually you try hurting the economy so it stalls. So again,
Yeah.
I don't, it's a weird time where part of the plan seems to be pain in order to make some things happen. So it's just going to be weird to see how that all unfolds.
Well, John, thank you so much for your time today. Those were all the questions I had, and I loved all of your answers. Very nuanced, learned a lot, and I think this is going to be good for our viewers. So thank you.
Awesome. No problem. Thanks so much for having me.